Okay, let's jump right into this. We are looking at a strategy today that is going to completely shatter the traditional home buying hierarchy. For way too long, lenders have basically taken a back seat in the process. Well, in this explainer, we're unpacking a system designed to position you as the absolute lead architect of the entire transaction. We're not talking about some minor workflow tweak here. It's literally a ground-up reimagining of the whole mortgage business. It raises a pretty critical question. Who really controls the mortgage transaction? Think about the traditional referral model for a second. Usually, a buyer goes to a real estate agent, they fall head over heels for a house, and then, well, the lender's dragged in at the 11th hour just to somehow make the math work. But what if we completely flipped that dynamic on its head? To actually reclaim that control, you've got to build what's called a financial envelope. You can think of this as a super comprehensive wealth and strategy structure. And the secret sauce here? You build this with a specialized team long before anyone starts endlessly scrolling through real estate apps or hitting up open houses. You are drawing the boundaries of what is possible first. Right, so let's look at the blueprint and lay that foundation. To truly become the mortgage architect, you need a highly specialized crew. We're going to walk through a totally revised hierarchy, kicking things off with your core wealth and readiness team. Step 1, Step 2, Step 3. Here's where the blueprint really comes to life. Right at the very top, you bring in a tax professional to validate the purchase strategy as a smart wealth and tax mitigation play. Next up, a financial advisor steps in to make absolutely sure this mortgage lines up with the client's long-term retirement goals. And working right alongside them is the credit specialist, making sure credit health is dialed in right out of the gate. Now, the strategic brilliance here really shines with how that credit specialist functions. Their primary gig is to capture and nurture those pre-ready leads. By embedding them securely in your architectural team from day one, you basically build a protective fence around these clients. They aren't going to wander back to realtors prematurely while fixing their credit, which means you maintain total, absolute control of the timeline. Okay, so with the foundation poured and your client's wealth secured, it's time to build the actual structure. Because, you can't just build a financial house and leave it at that. You have to protect it against the elements by adding in some vital contingency layers. This is exactly how you build an impenetrable safety net around your client. First, you bring in insurance agents to protect the physical asset itself, which really reinforces the logic for the loan amount. Then, you loop in an estate attorney to position the home as a legacy and asset protection play. And absolutely crucially, you align with specialty lenders for creative backup plans. Let's actually zero in on those specialty lenders for a quick second. Having them on your team, it's a total must-have. They are your immediate access to creative financing. We're talking things like HELOCs and bridge loans that your primary institution might not even hold. It is your ultimate plan B. So if the main path suddenly hits a roadblock, your financial envelope already has the architectural workaround completely mapped out. Now, you might have noticed a pretty glaring omission so far. We've built almost the entire financial house, right? Tax validation, advising, credit repair, insurance, estate law, specialty lending. But we haven't mentioned the person who traditionally sits at the very top of the food chain. So where exactly does the real estate agent fit into this massive blueprint? Well, get ready for the ultimate shift in power. Because in the mortgage architect model, the real estate agent drops all the way down to spot number 7. That's right, number 7. They act simply as the fulfillment partner. Their job is just to find the physical box that fits the financial envelope you've already masterfully designed. You dictated the terms, you set the budget, you built the strategy. They just go find the address. But, and this is a big but, making this a reality requires a massive change in how you communicate. If you just make a quick, casual phone call saying, "Hey, I've got a pre-approved buyer for you," boom, you immediately surrender all your authority. Ensuring the agent actually respects your financial envelope requires a completely different approach. You have got to shift from a casual referral to delivering a formalized, professional brief. When you hand that client over at step 7, you are handing the agent a documented, incredibly strict set of parameters. This cements your authority as the architect. It tells the agent exactly what physical box they're allowed to go look for, all based on the unshakable foundation you've already locked in. So I want you to really think about your current model right now. Are you just funding a loan, sitting around waiting for the phone to ring with a referral from an agent who's running the show? Or is it time to stop waiting and start drawing your own blueprint? By building out this exact hierarchy, you transform from a simple transactional vendor into the true mortgage architect. Thanks so much for joining me for this explainer.
Now ask yourself, what is the very first step you're going to take today to start designing your own financial envelope?